Hey, what's going on? 2022 is here, and there's going to be some new rules with Venmo. So whether you've been running a side business, or whether you've been just sending a ton of money back and forth between you and your friends, or if you've been buying stuff and selling it, you're going to want to know about this. My name is Rob, and I own Feedbackwrench. We help small businesses with their marketing, their digital marketing. We create content about entrepreneurship and whatnot here. And what I want to talk about is why this is going to be really important for you, because I want to teach you how to make sure you mitigate your taxes. Because you're going to get this 1099 from Venmo, you're going to want to know, how do you reduce your taxes, right? Now, reach out to a bookkeeper, a tax accountant. I recommend that you look for an outsourced accountant. And I got all sorts of those. We help them with their websites and stuff. But anyways, like and subscribe if this is helpful. Let's dive right into it. So for the 2021 tax year, Venmo will issue a Form 1099-K to business owners who have passed the IRS reporting threshold for their state of residence. So for most of these states, it's basically if you've gone over 20,000 US dollars in gross payment volume for sales of goods or services in a single year. So a couple of things. That's for $20,000 of gross, so that's just total, and that has to do with sales of goods or services. So how you actually label them in Venmo will have a little bit to do with it. And then you have 200 payments for goods and services. So if you hit 20K or 200 payments, you're going to be issued a 1099. And what a 1099 is basically income that's come to you, and it's completely untaxed. It's almost like you own your own business. So the first thing that's going to happen is you're going to have to run like a Schedule C. You're going to be a self-employed sole proprietorship that's going to owe some taxes, right? And we'll dive into that real quick. But basically, let's just say it shows that you earned a net 10,000 or a net 20,000 on Venmo, right? Now they issue this. It says, hey, we saw $20,000 worth of transactions come here. What the heck is going on? Well, here's the safety, okay? Number one thing I want you to do is I want you to open a separate bank account, and it's going to be your business bank account, right? So if you are approaching this 200 transactions on Venmo or $20,000 on Venmo, and you want to be careful, open up a separate business bank account. You should also probably become a sole proprietorship and register with your state. Go to your Secretary of State website. You want to actually register a little business name. And this is just good if you got side hustle income going. I would just let you know that the government is coming for you. First of all, there's this new announcement where they're going to be monitoring transactions under $200. They're going to be looking for this. Number two, there was that update about how the IRS wants you to report even stolen property. Well, that's because the IRS is spending all the money, or the government is spending all the money, and the IRS is gearing up with a ton more agents and everything. They are Joe Biden is in power, and Joe Biden wants to spend money, and he wants to tax. However you feel about that, that's what's about to occur here. So they're gearing up to tax more. And what Venmo is doing, they know how we're getting around this, or not me, but how people are getting around this. So bottom line is you should just embrace the fact that your side hustle is now an official sole proprietorship. And the way that's going to work is you're going to have your income that comes in. That's your gross. So maybe it shows 24,000, but then you're like, I didn't make that much. Well, you're going to want to make sure that all your revenue goes into this business bank account. All that Venmo goes into that. And then all of the things that you pay for in that business should be used in that business bank account. Whenever you want money out of that bank account, transfer it over. But the whole idea is if you just stick to really simple bookkeeping, have a business bank account, maybe register and actually create you can't create a business bank account until you register with your Secretary of State with a business name. So you should probably do that, right? It's not very hard. The more Democrat your state is, the harder it is to start a business. But once you've got that, that's just going to help you. And what you want to do is you want to show your gross and then your net, right? You want to show all the little expenses so that you're not on the hook for this $20,000. That's the biggest thing, is you have to show where did that money go. So if you get issued a 1099-K, you have got to show the net, right? So maybe you brought in all that money, but you also have to show, well, maybe I was buying furniture, and then I was fixing it up and selling it, but I was using my personal bank account when I bought the stuff. Well, you have to put those as inventory you've purchased. And now you're going to want a bookkeeper eventually if you get really big, but you just need to know you're going to want to start tracking this in a business bank account. You probably want to set up QuickBooks Online, or Zero, something like that. I recommend reaching out to, if you just search tax accountants near me, outsourced accountant near me, folks will be able to help you with this. But you want to be on the lookout for that. That's a big deal. They're going to be issuing this. The other thing that you're going to see is in Massachusetts, Maryland, Vermont, and Virginia, the threshold's $600. So a handful of you are going to get 1099s, and You just need to know that you want to keep that bookkeeping set up. If it shows you brought in $22,000 and that's because you were buying furniture, fixing it up and selling it, boy, it shows $22,000 in gross, doggone it, you got to get the net in there. So start thinking about that, right? Maybe keep a spreadsheet of all the things that you bought and eventually get your bookkeeping going. The other thing you want to know is that you are going to be taxed a couple times here, okay? So right off the bat, welcome to sole proprietorship taxing. You're a small business owner like me now, and you get to see the gross and write a check. And there's nothing worse than that, okay? So the first thing that you're going to owe, unless you have W-2 income that goes up to the Social Security limit, which is like $150,000, what you're going to pay right off the bat is you're going to pay 12.4% in Social Security taxes and 2.8% in Medicare taxes. Those two things are considered your self-employment taxes. Now, if you've got W-2 income from a normal job coming in, there's kind of some games that get played there because you only pay Social Security up to that limit, okay? Now, you only owe that tax on the net. Again, if you showed $22,000 in gross, but you bought $20,000 worth of furniture and you only had $2,000 net, you'd only owe that self-employment taxes on the $2,000. And then it's going to flow through to your 1040. You're going to pay income tax, and you're going to pay state income tax and federal income tax. So just prepare for that. Now, here's a little secret. If you don't have any employees and you're going to start having to keep track of this, one of the best things you can do is open a SEP IRA. A SEP IRA or a solo 401k. And now if you got another job, you got to be careful here because there's some rules if you got a 401k going on this business and not on this one. But long story short, you could take up to 25% of the net of that business net, right? So if you netted $5,000, you'd be able to take 25% of that and put it into an investment account, and then you can actually invest it. You know how a Roth IRA or traditional IRA, you can kind of